Welcome to your daily solo 401k webinar and Q&A session with my solo 401k financial, where we help you to stop overpaying taxes and start building real retirement wealth. Today's topic is, can I use my 401k to buy an apartment? Did you know you can actually use retirement funds to buy real estate, even an apartment building? That's right. Your 401k dollars don't have to sit in mutual funds. You can put them to work in income producing real estate, completely within the IRS rules, if you structure it the right way. But here's the catch, not all 401ks allow it. And if you do it wrong, you could trigger major taxes and penalties. In today's webinar, we are breaking down exactly how investors and business owners are using their solo 401k to invest in apartments the right way. This is your chance to get answers. Use the chat to ask questions on today's topic or anything else. Chat them over now so that we can be sure to get to them all. Let's get started. Looks like we have a question here. Can an S corp with two 50-50 unrelated shareholders with no employees open a solo 401k? That's a very good question that we get quite a bit. The answer is yes, provided that those are both not only owners, but they're also W-2 employees. So not only do they both have to be owners, but they both have to be W-2 employees. Because remember, a solo 401k is used by a business that provides goods or services. So as long as that business is not a passive investing business, but instead it's an actual business that provides goods and services, then yes, the S corporation would sponsor the solo 401k. Both owners, in this case, they're both 50-50 owners. As long as they're owners and they're W-2 employees, then they can both participate in the plan. So one plan, the plan would be sponsored by the S corporation, and both individuals can contribute to the plan. Here's an example of a two-participant plan. On the right hand here, this would be the example. If you've got a business such as an S corporation with two owners who are 50-50 owners in the business, they would have a total of 6 brokerage accounts or bank accounts, also known as holding accounts, under one plan. So one plan, because the plan is sponsored by the business, with 6 separate holding accounts, a pre-tax, a Roth, and a voluntary after-tax for each participant. So a total of 6 holding accounts. Now be careful out there. There are some solo 401k providers out there who falsely promote setting up 2 separate solo 401k plans for the same S corporation where you have both owners in the same business. And they oftentimes do that because they want to double charge you. They want to charge you double setup fees and double annual fees, which is out of compliance with the IRS regulations, because all 401k plans are sponsored by a business. Just like if you work for a full-time employer, let's say you work for NVIDIA. So NVIDIA has a 401k that's sponsored by the NVIDIA Corporation. So it's not a separate 401k plan for each employee. It's one plan because all those employees work under NVIDIA. Same thing with the solo 401k plan. It's just one plan if you have one business. So if the S corporation is the business, the S corporation sponsors the plan. So it's just one plan. But some providers out there will try to get you to open up 2 separate plans for the same business. Well, that's going to create a compliance nightmare with the government, because a Form 5500 easily applies at the per plan level, and the plan is sponsored by the business. So you can't have 2 plans sponsored by the same business, among other things. So to learn more about the S corporation rules when you have multiple owners, take a look at the following link I'm going to share, which is a page from our website. So you need to, each owners need to own at least 3% or more of the S corporation. So it doesn't have to be a 50-50 split. So you may have one owner that owns, let's say 97%, the other owner owns 3%. They would still qualify for the solo 401k if they both also work for the business. So one plan, because it's one business, 6 separate holding accounts for each business. So a total of 6, because you have 2 participants in the plan in this example. So good question. Okay, today's topic is, can I use my 401k to buy an apartment? So if this information is helping you feel more confident about your future, please take 1 second to like and subscribe. It tells the platform this content is valuable, which helps other solopreneurs like you to find it. Subscribing guarantees you get notifications of all of our crucial content that we deliver every day to help you secure your retirement. Looks like we have a couple more questions. We'll get to those here in a moment. So, why a regular 401k usually can't buy an apartment building, but a solo 401k plan can. So, when you have a traditional 401k, let's say you work for Microsoft or Apple, those types of 401k plans don't allow for investing in alternative investments like real estate. Those are known as traditional 401ks. They generally have a limit menu of investment options, and they're usually equities or mutual funds or index funds. Whereas with a solo 401k, specifically a self-directed solo 401k, you serve as the trustee of the plan, and therefore you have full control regarding not only the types of investments you can make, such as equities and alternative investments like apartment buildings, but you can also elect to make voluntary after-tax solo 401k contributions, pre-tax contributions, and Roth contributions. And that's because with the self-directed solo 401k, you as the trustee have full control over the solo 401k plan, and you can also borrow from the plan through a solo 401k participant loan. So in order to get your solo 401k plan ready to invest in an apartment building, you first have to qualify for the solo 401k. Obviously, a solo 401k is for those who are self-employed and whose business does not employ any non-owner full-time W-2 employees who work 1,000 hours or more. So as long as you meet those eligibility requirements, you can open a solo 401k plan, and the solo 401k plan can be funded by making annual contributions to the plan. For tax year 2025, the annual contribution limit is $70,000. For someone who's over age 50, they can contribute an additional $7,500, known as a catch-up contribution. And then there's the super catch-up contribution stemming from the passage of Secure Act 2.0, where you can make an $11,250 super catch-up contribution instead of the $7,500 normal catch-up contribution. So you can't make both. And that super catch-up is available to those who are age 60, 61, 62, or 63 in tax year 2025. So if you are under that age or over that age, you would not qualify for the super catch-up contribution. Another way to fund the solo 401k plan is you can transfer an IRA or a former employer plan to the solo 401k. Here at my solo 401k financial, we'll help you transfer those funds to the solo 401k plan by filling out the applicable transfer forms and checking off the applicable boxes so that the movement of those funds is done as a non-taxable direct rollover or trustee to trustee transfer. And there's no limit in the amount of IRA or former employer plans you can transfer to the solo 401k, and those transfers don't impact the annual contribution limits. So those are different. So you can transfer or roll over an unlimited amount of IRAs or former employer plans to the solo 401k plan, and it does not result in taxes or penalties. And this way, you're going to gain checkbook control, also known as wire control over your solo 401k. And that's another way of referring to the solo 401k plan as self-directed solo 401k. So when you hear the word checkbook control or wire control, that's just a way of saying, hey, this solo 401k is self-directed in that you can invest in alternative investments like apartment buildings, cryptocurrency, precious metals, and so forth, along with equities. And you can and make those alternative investments by wire or by writing a check. Most people don't make alternative investments by writing a check. They'll generally do it by wire. Okay, let's pause it for a moment. It looks like we have some more questions here. Got a question here from Glenn. Can you clarify a small piece for me? If and one of your examples shows you can do Roth solo self-employment income needed 69,023 plus 46, but after taxes, that 69 would be less. Is that amount of tax you can allocate, or the total compensation would be less taxable? So if your business is taxed as a sole proprietorship, then you have to subtract 1/2 of self-employment income tax before you do the calculation for solo 401k contributions. Let me share a page from our website for a sole proprietorship regarding how much income you need for tax year 2025 to maximize your contributions, whether it's a voluntary after-tax contribution or a mixture of employee, employer, and voluntary after-tax, for example. Let me find that for you here. Give me a moment here. I think that's what your question is pertaining to. But you're going to need more than $70,000, which is the overall limit for making contributions. If I can locate that amount here, give me a moment here while I locate that page from our website. It's a really handy page that a lot of our clients refer to. We have it for S corps, partnerships, as well as sole proprietorships. I think your question pertains to a sole proprietorship. So let me find that specific link and share that with you here. I think I located it here. Here it is. So let me share that with you here. It's the magic number that you need regarding Schedule C, line 31 income to maximize your contributions. I just shared that link here on the live chat. So take a look at that. We also have one for S corps and so forth. Let me see here if we have any other questions in the meantime. Oh, here we go. I'm trying to do a mega backdoor Roth. Currently have a solo 401k with the census. Can I do it through them, or do I need to transfer it to you guys? Great question. So it's my understanding that a census plan does not provide the mega backdoor Roth strategy option. And I know that because we have a large number of a census plans that have been restated to my solo 401k financial over the years. And it's so common that we had to do a blog post on that. And I think we even did a live webinar on that topic. And let me share that with you here, that link. And then my solo 401k financials plan allows for the mega backdoor Roth strategy. I just share that link with you. Let me see if I can find another one here. But yes, we help. I mean, I would probably say over 30 accounts a month we restate from a census to our plan because they want to utilize the mega backdoor Roth strategy. Let me see if I can locate another link. Here we go. I've got another link here on that topic. And here's a step-by-step guide on that. So yes, the solo 401k from my solo 401k financial allows for the mega backdoor Roth strategy. And if you're an census client, you can restate that plan from a census to a plan from my solo 401k financial. And here at my solo 401k financial, we'll help you hold the funds at your local bank, or they can be held at Fidelity or Schwab. So yes, Fidelity and Schwab will provide brokerage accounts for solo 401k plan offered by my solo 401k financial, because they understand that it's my solo 401k financials plan that allows for all the bells and whistles, such as the mega backdoor Roth strategy, solo 401k participant loans, investing in apartment buildings, real estate, metals, precious metals, cryptocurrency, and so forth. So even though Schwab and Fidelity offer their own solo 401k, they also offer what they refer to as non-prototype company brokerage accounts for a solo 401k offered by my solo 401k financial. That's one of the reasons why a lot of business owners either open solo 401k plans with my solo 401k financial, or they transfer their existing solo 401k to a plan offered by my solo 401k financial. Because unlike other solo 401k providers out there, we let you choose where you want to hold your funds at. At the end of the day, it's your money. So you should be able to choose where to hold your darn funds, whether it's your local bank, credit union, or a brokerage firm like Fidelity, Schwab, Altruist. So as long as those banks or credit unions or brokerage firms will cooperate, then we'll let you choose where you want to hold your money at. That's actually not that popular. A lot of other providers, again, make you use their own bank that they get a kickback from, or they get referral fees from. Not here in my solo 401k financial. When we say we offer a self-directed solo 401k plan, we truly mean that. So great question. Let's see here. Again, please like and subscribe to our YouTube channel. It helps get the word out to other solopreneurs out there. It looks like we have some more questions coming in here. We'll take a look at those here in a moment while we continue on today's topic, which is, can I use my 401k to buy an apartment? And we've been talking about that in great detail already, but let's continue. So it's important to know the IRS regulations anytime you're dealing with any type of investment, whether equities or alternative investments like real estate, such as an apartment building. So not all solo 401k plans out there allow you to invest in alternative investments like real estate. And also keep in mind that when a solo 401k invests in an apartment building, title to that building needs to be in the name of the solo 401k plan. For example, let's say your name is John Doe and the name of your solo 401k plan is Palm Trees Retirement Trust. Title to that apartment building would be taken in the name of John Doe, comma, trustee of Palm Trees Retirement Trust. So all the rental income would flow back to that solo 401k plan. All expenses like property taxes, expenses such as repairs on that apartment building, whether it's a new roof, a new coat of paint, or for fixing a leaky toilet, those need to be paid with funds from the solo 401k plan. And you cannot perform those functions known as sweat equity functions. Those have to be done by an unrelated party, someone who's not a disqualified party. You probably don't want to do that work anyways because you're busy doing other types of work, such as running your self-employed business. It's also prohibited to rent that apartment building to yourself or to certain family members, such as your spouse, children, or parents. Those are known as disqualified parties. You can't rent the apartment building to those individuals. Also, you cannot buy that apartment building from yourself, your business, or if someone who's a disqualified party owns that apartment building, such as your kids, parents, or spouse, you cannot buy that building. Your solo 401k plan, more specifically, cannot buy that building from those individuals and vice versa. You can't sell or exchange an apartment building owned by your solo 401k. You can't sell or exchange it to yourself or other disqualified parties like the ones I mentioned, such as your kids, children, or parents. Now, one of the advantages of investing in a solo 401k plan and investments like equities or alternative investments like an apartment building is that it's going to grow tax deferred. The rental income goes back to the plan, it grows tax deferred. When you sell that building, the proceeds go back to the solo 401k plan and they'll grow tax deferred, and then you can reinvest them. Now, if you make that investment through the Roth Solo 401k, then all those gains and the sale proceeds will grow tax free. So that's one of the advantages of making an investment such as real estate, like an apartment building, through the Roth Solo 401k, is that all those investment gains grow tax free. Of course, capital gains never apply to a solo 401k plan, whether we're talking about pre-tax solo 401k funds or Roth Solo 401k funds, because a solo 401k is a tax shelter vehicle, so it's not subject to capital gains. Okay, let's take a look at some more questions here. Let's see here. That's right. To get started with the solo 401k from my solo 401k financial, you can complete our online application. I'm going to share that link with you. That's how we collect the necessary information to draft the solo 401k plan documents, which are technically retirement trust documents, because a solo 401k is a separate entity. It's a retirement trust. So it'll have its own set of legal documents made up of adoption agreement, trust agreement, summary plan description, beneficiary election form, and so forth. We will also obtain a tax ID number for the plan. That's a separate EIN number, employer identification number, is separate from your business. So a solo 401k is a retirement trust, therefore it requires its own employer identification number that will be issued by the IRS in the name of the solo 401k plan, and they will help you to open up the holding accounts for that plan. The holding accounts, also known as bank or brokerage accounts, will be titled in the name of the plan using the EIN number. So it's one plan with separate holding accounts. So a solo 401k plan is a retirement trust. On the left here, here's an example of a one participant plan with three separate holding accounts. So one plan, so it's not three plans, it's one plan that has separate holding accounts. So XYZ Trust, XYZ Trust, XYZ Trust again, each labeled with one that will be labeled pre-tax, the second Roth, and the third one voluntary after tax. So one business, one plan, one EIN number for the plan. The image on the right is an example of a two participant plan. Let's say you've got two business owners in the same business or two spouses in the same business. This would be one plan it's sponsored by the self-employed business, six separate holding accounts. A solo 401k, just like a traditional 401k, is a defined contribution plan, meaning that you are required to separately track each participant's funds. So you don't have an option. You have to have separate holding accounts for each source and each participant. Okay, let's see if we have some more questions here. And we'll keep going through our topic today, which is, can I use my 401k to buy an apartment building? Let's see here. So we have all kinds of comments and questions today. Here we go. When I opened the brokerage account at Fidelity by following my solo 401k instructions, it was named by Fidelity, non-prototype, according to the generic sub-account policy. Is that the correct way? That is, because keep in mind, Fidelity offers brokerage accounts, and they refer to those brokerage accounts as non-prototype brokerage accounts for a solo 401k offered by my solo 401k financial. Because again, Fidelity offers their own solo 401k, but it doesn't come with all the bells and whistles like a solo 401k from my solo 401k financial. Those who are looking to to explore the difference between a solo 401k offered by my solo 401k financial and one offered by Fidelity, let me share a link so that you can review the differences. Give me a moment here so that you can compare them, because they can get confusing, especially if you're new to the solo 401k world. Here's the link right there that talks about the difference between a solo 401k offered by my solo 401k financial and one offered by Fidelity Investments. And again, some of the differences are that the solo 401k offered by my solo 401k financial allows for the mega backdoor Roth strategy, as well as solo 401k participant loans, in addition to self-directed investing like real estate, such as apartment buildings, whereas Fidelity solo 401k does not allow for any of those investments. Now, I'm also going to provide a link regarding how you can nickname those Fidelity brokerage accounts for a solo 401k offered by my solo 401k financial. Give me a moment here, because you're going to be able to go in there and label each brokerage account as pre-tax. The second one is Roth, and the third one is voluntary after tax, so that you know which ones are which. So let me share that link here with you. Give me a moment here. So here's the link here. But yes, Fidelity labels the brokerage accounts for a solo 401k offered by my solo 401k financial as non-prototype brokerage accounts. So there's a link there you can take a look at regarding nicknaming those accounts. Okay, let's see if we have some more questions here. So let me scroll down here. Here's a question here. It's a good one. Fidelity would not set up withdrawal from my business account to my solo 401k. They say instead, talk to the bank. Do you have advice of what would be the simplest, easiest way to move the funds? Great question. And that's right. A solo 401k offered by my solo 401k financial, where you utilize Fidelity's non-prototype brokerage accounts to hold the funds. You want to reach out to my solo 401k financial for those type of questions, because the plan is with my solo 401k financial. So good question. So yes, you're going to be able to actually link your business bank account to those Fidelity brokerage accounts for the solo 401k offered by my solo 401k financial, so that you can make contributions electronically via ACH. That's where you're going to link your business bank account to those Fidelity brokerage accounts, and that's going to be done on your business bank side. Let me share a link from our website that will walk you through that. So you're going to enter the Fidelity brokerage account routing number and your Fidelity brokerage account solo 401k account number as well, and you'll be able to link that business bank account to those respective brokerage accounts. Let me provide that to you, so that way you can make contributions electronically via ACH. ACH means the funds will flow from your business bank account directly to those respective Fidelity brokerage accounts. Let me share that link with you. So good question. Here's the link to that page on our website that talks about linking your business bank account to those respective Fidelity brokerage accounts for making those contributions electronically via ACH. Great question. Okay. Let's see if we have any other questions for the moment. Oh, here we go. What is the easiest way to request Form 5500 assistance? So yes, here at my solo 401k financial, we will assist our clients in preparing that Form 5500 easy. We'll actually prepare that for you and file it electronically for you at no additional cost, as long as you timely request that form. That's included in our annual fee. Now, that Form 5500 easy, if you want us to prepare that for you, you need to timely request that. So here we are in tax year 2025. Today is October 27th, 2025. So we're way past the filing deadline of the Form 5500 Easy for tax year 2024. For tax year 2025, the Form 5500 Easy is generally due by July 31st of next year in 2026. And that's going to apply if the market value of your solo 401k plan is over 250,000 as of December 31st of 2025. So as long as you timely request the preparation of that Form 5500 Easy, we'll go ahead and prepare that for you. Let me share that link that you can fill out to request that Form 5500 Easy. Give me a moment here and I'll share that with you here. By filling out this questionnaire I'm about to share with you, and if you're a client of my solo 401k financial, you're going to get on our annual Form 5500 Easy preparation list for next year. So for the 2025 Form 5500 Easy, that'll be due by July 31st of 2026. Give me a moment here while I locate that link. Now, we also perform other reporting for our clients who timely request it. We'll prepare Form 1099-R, which is used for reporting conversions, whether you're converting pre-tax solo 401k funds or you're converting voluntary after-tax solo 401k funds to the Roth solo 401k or the Roth IRA as part of the Mega Backdoor Roth strategy. We'll prepare that Form 1099-R and file it with the IRS as well, as long as you timely request it. And we provide that service at no additional cost for our clients. And let me share a link to the Form 1099-R request. That Form 1099-R also applies if you take a distribution from the plan. So here's a link to the Form 1099-R request page. And those are online forms we would fill out. Okay, good question. So yes, if the market value of your solo 401k is greater than $250,000 as of the end of the plan year, so December 31st of 2025, for example, then a Form 5500 Easy needs to be filed by July 31st of 2026 with the IRS. And I just shared a link that you would fill out so that you get on our Form 5500 Easy preparation list for tax year 2025. Okay. Thank you for the comments there. Let's continue here. Again, please like today's webinar. It helps get the word out to other solopreneurs. You're also guaranteed to receive notifications when we go live. And as far as you can also visit our community where we have over 30,000 members. If you're a financial advisor or any type of professional like an attorney, tax preparer, insurance agent, real estate broker, you can join our community and you can post guest blog posts to flex your knowledge, and you can link it back to your company's website. And the 30,000 plus eyeballs in our community might click over and look at your services, and they might even reach out for your services. It's free to join. Okay, let's continue here. So we've been talking about, can I use my 401k to buy an apartment? And of course, the answer is yes. Let's pick back up on that topic. So go ahead and continue to type over your questions during today's daily webinar, and we'll answer those questions as they come in. So here's an example. Let's say you roll over 200,000 from an IRA or an old 401k over to the solo 401k. You can then purchase an apartment building. It'll be titled in the name of the solo 401k. Let's say you collect $2,000 of monthly rent. If you made that investment through the pre-tax solo 401k, that's going to flow back to the pre-tax solo 401k holding account, and then you can reinvest those funds in other investments. and it'll continue to grow tax deferred. If you made that investment through the Roth Solo 401k, it'll flow back to the Roth Solo 401k account and it'll grow tax free. So many clients like to invest in real estate, including apartment buildings. You also want to make sure you remain in compliance when you're investing in alternative investments or any type of investment, but specifically apartment buildings, since that's today's topic. So again, you want to make sure you don't do any of the sweat equity work on that building. So you can't even pick up a hammer or a paintbrush. Those have to be done by a contractor, someone who's not related to you, and you have to pay for those expenses using solo 401k funds. You want to avoid benefiting personally from that solo 401k investment. That means that you cannot use that apartment building for personal use, such as renting it out. Even if you pay fair market rent, you can't rent it out personally. So you can't use it personally. You want to make sure that when you make that apartment building purchase through the solo 401k, that it's titled correctly. So it needs to be titled in the name of the solo 401k plan. We talked about the contribution limits already. So it looks like we've come to the end of our daily webinar here today. So that's it for today's solo 401k session. Thank you so much for investing your time with us. Your time is valuable and your retirement future is worth it. If you haven't yet, please like and subscribe so we can keep building this community. We'll be back here tomorrow with more crucial content to help you secure your retirement.